So I'll pull up 100% of his loan, which is, what did I say, 150,000. And then I'll also pull up half of his loan. And when I'm in person, I would typically do 175%, 50%. Over the phone, you want to make their decision as quick and simple as possible.
Today's training is going to feature Nina and I. What we're going to do is basically go over mortgage protection. We're going to go over things like lead types. We're going to go over things like products. We're going to go over carriers, scripts, scenarios, and basically just an A to Z overview of how to present mortgage protection and kind of the different ways and scenarios you can do that.
We'll call it the mortgage protection workshop. So this one's going to be awesome, you guys. As you guys know, there's so many different lead types within FFL. And the cool thing about what we do is that we really do utilize our entire license. We have options from final expense to term to mortgage protection, IULs, annuities. There's just so much opportunity. So mortgage protection is just one of the, areas that we really focus on. Now to get into leads, guys, there's so many different types of mortgage leads. From direct mail to internet leads. Basically, if you're brand new on here and you're just getting into the swing of mortgage, what a mortgage protection lead is, either a homeowner either purchases the home or refinances the home, or they just get letters in the mail or they're looking online for mortgage protection coverage. Now, what that is, it's basically, say someone owes $500,000 on their loan. They're basically looking to protect or looking for coverage to cover that $500,000, that if something were to happen to them, their spouse, co-borrower, children don't lose the home. So go ahead.
Yeah. So in terms of products for you guys to get familiar with, typically it's going to be basically two, possibly three products that you're going to present. And I'll go through in a little bit, kind of like the age ranges and the scenarios of kind of what's going to be the best fit typically. But pretty much all we're doing is we're either going to cover the full term or half, or sorry, not the full term, the full mortgage or half the mortgage with a term policy. It's going to match that amount or match about half that amount. And then also we have something called equity protection, where basically we're going to sell them a whole life policy to basically cover 6 months, 9 months, 12 months, 2 years, whatever the client wants, to make sure that the equity they have in the house, when they pass away, their family can sell the house, not to worry about payments while the house is on the market.
So we'll make sure we kind of break down different scenarios and where you would go to equity protection and where you would go to just a regular term or cashback option policy. What we're going to do, if you guys have any questions, feel free to pop them in the chat box about mortgage protection, but we're just going to jump straight into the script. So you can be my client.
All right.
Perfect. Alrighty. And one thing, you guys, about me is I always have a script in front of me. That's the one thing I know that I'll never mess up and I'll never lose if I just have it in front of me. And if I do get confused or lost, I'll simply just look at it. Essentially with mortgage protection, your goal is to either A, give them a call and try to get them right there and then on the phone, grab that pen and piece of paper. This will take about 10 minutes to go over. But oftentimes you will notice that, typically when someone's looking for mortgage protection coverage, they're probably in their working years, or they might not be working, but they're busy. So you might have to future book an appointment, which is completely fine.
Or have a spouse that's not there.
Yeah, or have a spouse that's not there. So you always want to make sure that you have both decision makers on the phone. So you'll ask that on the initial call. So I'm going to do like a one call close mortgage protection script with you.
Okay.
But let's just say he couldn't do it right there and then. So we had to book the appointment. Basically, you go through your full booking script, and I think that people don't like booking phone appointments because they think they're going to get no-showed so much. There's verbiage and words that you can use at the end of every single phone script in order to cement that appointment. So like things that I like to add, say I'm booking Hayden on an appointment. Towards the end, we confirm a date and a time for that appointment. Basically, I'll say, okay, Hayden, so I have you on the books for tomorrow at 1 p.m. Central, or whatever time zone he is. just a quick question before I have you off the phone. Are you pretty good at keeping the appointments you set in place?
Yes.
Yes, okay, awesome. I am as well. I just want to make sure, I know both of us are busy. I'm busy, you're busy. I just want to make sure that we respect each other's time. So I have tons of other people to talk to tomorrow, but you will be there on the phone at 1 p.m. tomorrow, correct?
Yep.
Okay, awesome. I look forward to speaking with you tomorrow at what time was that again?
1 o'clock.
1 o'clock. Okay, so like I always like before I get off the phone, I'll say I look forward to speaking to you at what time was that again? Just so he can reiterate. So like within just that little sentence, like you've cemented that appointment twice. And then always just having them write down the information. So the key is to never rush through, you know, booking any appointments. Like I would rather book 5 real appointments than 10 fake appointments. Like, let's be real. I want the clients to show up. So Hayden, you're a one call close, you're a mortgage protection lead, you know, from the CRM, you fill out a mailer. Okay. So, one call close. Actually, no, I booked you an appointment.
Okay.
So I'll say, hi, Hayden.
Yes.
Hi, Hayden. This is Nina giving you a call for our scheduled appointment regarding the mortgage protection coverage. How are you doing today?
Good. How are you?
Great. Thank you for asking. Is now still a good time for you?
Yes.
Okay, awesome. Hayden, go ahead and grab a pen and piece of paper for me. I'm just going to need you to write some information down for me.
Okay, I got it.
All right, first things first, I'm going to have you write down my first and last name. My first name's Nina. My last name's Hill. Spell it out for them. And then the state just requires that I leave you with my producer number. With this number, you can look me up on the Department of Insurance website and find me, or you can give the Department of Insurance a call and my name will pop up, okay?
Okay.
That number is blah, 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 blah.
Got it.
Okay, can you read that back to me?
Blah, 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 blah.
Perfect. Now, Hayden, typically when people request mortgage protection coverage, they're looking to make sure that either your co-borrower or spouse doesn't lose the home if something happens to you. Is that what you were looking for?
Yeah, I was just looking to basically just make sure if something happens to me, my wife and my kids, they can still keep up with the mortgage. They don't lose the house.
Okay, awesome. And what is your wife's name?
Nina.
Okay. And how many kids do you have?
1.
One. Okay. The reason I asked that, you guys, is because I'm going to build up and talk about Nina through myself throughout the entire presentation because it's constantly bringing up his why and his reason. And Hayden, do you know the difference? Do you know the main difference between mortgage protection and life insurance?
I would just guess that mortgage protection covers your house and life insurance is for you.
So the main difference between mortgage protection and life insurance is that life insurance is only going to pay out when you die. So you have to actually die in order for that money to pay out. Where where mortgage protection insurance is going to cover you when you die, but also if you qualify, it'll be there to cover you in the event of a terminal, chronic, or critical illness as well. Does that make sense? Yeah, because typically in those situations, you probably wouldn't be able to work anymore. So mortgage protection just ensures that you're still able to keep up with your mortgage payments while out of work or in the hospital. Does that make sense?
Yep.
Awesome. Now, Hayden, I'm a broker. I'm not a captive agent. So that means I'm basically like the Expedia for insurance. I have access to over 20 A+ rated carriers. So not only will I be able to find you the best price on this type of coverage, but it'll also let me know which companies will decline you and which companies might approve you based on your age, health, and habits.
Okay.
Awesome. So this is only going to take about 2 minutes for me to just go through some basic medical and finance questions with you. That way I can see if you can even qualify.
Okay.
Awesome. And then I jump guys straight into the inventory sheet. So from there, you have your inventory sheet out, and then I'm asking all the mortgage questions. So Hayden, on this form, it says that you owe about $150,000 on your loan. Is that still correct?
Yeah, that's about it.
Okay, awesome. And now is that mortgage a 15, 20, or 30 year?
It's a 30.
30 year. Okay. And how many years would you say you have left?
I just moved in.
You just moved in.
Yeah.
You just purchased the home. Congratulations. Yeah. And if you were to sell the home today, what is the value of it?
I would say maybe 200,000.
200,000. Alrighty. And then what is your monthly payment on that mortgage?
It's about 2,000.
2,000 per month. Alrighty. And then do you ever pay extra towards the mortgage to pay it off early?
No.
No. Okay. And then Hayden, how young are you?
Let's go with I'm 50.
50. Alrighty. And then are you currently working?
Yes.
Okay. And what do you do for work, Hayden?
I work in technology.
Technology. And you said your wife is not working, correct? She's the stay-at-home
Stay at
mom?
home, yeah.
Awesome. Well, that's a job in its own.
Mhm.
And Hayden, what about is your monthly income?
It's about 4,000 a month.
4,000 per month. Okay. And then are you a smoker or non-smoker?
I'm a non-smoker.
Alrighty. And then what medications are you currently taking?
Just cholesterol.
Okay.
And
Is
then,
that a torvastatin for cholesterol?
yeah, that sounds right. And then just you know, baby aspirin, allergy pills, just nothing serious.
Okay. Alrighty. And how long have you had that high cholesterol?
About 10 years.
10 years. Okay. And guys, I like to make everything a pretty big deal, whether it's baby aspirin or cholesterol or lisinopril. Although we know that it's not like the biggest deal as far as qualifying, I think it's really important to hit on that. That way, throughout the presentation, you're like, oh, you know, if you qualify, I don't know if you're going to be able to qualify. And then Hayden, any major surgeries for you recently?
Never. No.
Okay. And then let me know if you've had any of these medical conditions previously, any heart attack, strokes, or cancer.
No.
Okay, any stents, diabetes, asthma, COPD?
I think maybe I'm pre-diabetic.
Okay. Are you taking metformin or anything for that pre-diabetes?
No, just diet and exercise.
Diet and exercise. Okay. That's good. They haven't put you on anything yet.
No.
Okay. And then any kidney or liver disease or anything like that?
Nope.
Okay. And Hayden, do you have anything in place currently to leave behind for Nina if something were to happen to you? Like any life insurance, 401k, savings?
I have life insurance.
Life insurance. And is that through work or is that private?
It's through work.
Okay. So you know how that works, like a company car, once you leave, quit, or retire, that goes away, right?
Oh, really?
Yeah, it's just like a company car. Same thing with your job. They take it once you leave, quit, or retire.
Got it.
Awesome. So Hayden, I have a good idea of what you'll be able to qualify for. There's a couple different ways we can go about this coverage. So guys, this is situation one. So Hayden is 50 years old. He's healthy for the most part, has, you know, is only on cholesterol medication and a baby aspirin. So he's pretty much going to be able to qualify for any type of term policy. He is 50 years old. So we have options here. We could do cashback term. We could do regular term. We could do decreasing term through Americo. So basically what I like to do is I like to go through the different types of programs and let them pick which one makes most sense to them. So I'll say, okay, Hayden, based on everything you told me, I have a good idea of what you'll be able to qualify for. So there's going to be two different types of plans that make sense for your situation.
Okay.
The first one is going to be a level term policy. This policy will cover any type of death, whether it's due to a natural cause or accidental. This policy also comes with living benefits, meaning if you develop a terminal, chronic, or critical illness, it'll be effective as well. Sorry, guys. Now, this policy is going to last you 30 years based on your 30-year mortgage. After that, it will expire. Its main purpose is to make sure you're covered during the duration of your loan. Does that make sense?
Yeah.
Awesome. Now, option number 2 is very similar to the first option, but it's called a level term with cashback. Now, this is going to be the most popular option that people go with to cover their mortgage. It works the same way as the first option. The only difference is that when the policy ends at those 30 years, you get all of those premiums you put into the policy back tax-free. Meaning if you die in the 30 years, your family gets the full mortgage paid for, but if nothing happens to you, you get every dollar that you put into the policy back. So it's kind of a win-win.
Okay.
So of these two options, which one makes the most sense for your situation?
I mean, I like the idea of the term with the cashback, but what's the prices for both of them?
Absolutely. Let me go ahead and get that for you. Obviously, we have to make sure if you can even qualify for this type of coverage. So what I like to do from there, you guys, is I'll go to a quote tool. So I always lead with Americo for mortgage protection if I know that they're in good health to qualify. So since he said he liked that cashback option, I'm going to pull up basically a couple different options with CBO. So I'll pull up 100% of his loan, which is, what did I say, 150,000.
Mm-hmm.
And then I'll also pull up half of his loan. And I've, you know, when I'm in person, I would typically do 175%, 50%. Over the phone, you want to make their decision as quick and simple as possible. And you can always add and show them 75% as well. So I pulled up 150,000 and 75,000. Let's just say the 150 is 250 per month, and the 75,000 is 125 per month. All right, Hayden. So I went ahead and pulled up both these options for you. The great thing about this coverage is the prices will never go up and the coverage will never go down. So when something happens, if something were to happen to you tomorrow and you owe 150,000, your wife Nina would get the full 150,000. But if something happens to you 10, 15 years from now and you only owe 50,000 on that home, your wife will still get that 150,000 to cover other expenses and cost of living.
Okay, got it.
So the first option I pulled up for you is the 150,000. That one is 250 per month. And then the second option is 75,000, which covers about half of your loan, and that's 125 per month. Of those two options, which one would you like to leave behind for Nina?
I like the idea of covering the whole mortgage, but 250 a month, that's a little bit expensive. What's the other one with the no cash back?
I can go ahead and pull that one up for you, Hayden. What most people do in your situation is they'll start with something like the 75,000. I can even pull up something in between, like 75% of the loan for you as well. And you can always change it or increase down the line, of course, if your health is still in order and you're still healthy, okay?
Okay.
So do you want me to still pull up those, the non-cash back option, or do you want me to pull up that 75%?
Yeah, can you pull up the non-cash back?
Okay,
for the whole thing?
Okay, so then at that point, I would pull up the level term. And typically in those situations, like, you're not going to get too many people that are like, hey, can I get the other option, after they've already kind of decided which one they want to go with. But if you were to get that, you can always pivot to the other option. All right, so Hayden, this non-cash back option one, to cover the full mortgage, like I said, this one expires after the 30 years, so you wouldn't get anything back at the end. For 150,000, it would be 198 per month.
Okay, I think I can do that.
Okay, awesome. Well, Hayden, I wish I could make decisions on behalf of the company. Unfortunately, I can't. They have to be the ones to approve you first. So what we're going to do is we're going to take about 5 to 10 minutes to go through the application process to see if you can even qualify. And then I typically just start pulling up the application and I'll say, okay, and what's your date of birth? And then just transition right into it. From there, guys, there's going to be a couple of pit stops. So like the way I like to ask for social, like, cause that's a big thing. Someone's like, oh, I don't feel comfortable giving you my social. At this point, once they've already decided like, hey, this is the one I want to go with, like, pretty much they're more than likely going to give you their social, but you will get some backlash on that. So the way I ask for social is, so Hayden, since no one's going to be coming to your house to draw blood or do a physical exam, underwriting is going to take your social and run it through the MIB, which is the Medical Information Bureau, just to check your prescription and medical history to make sure you're even medically eligible for this coverage. So what's your social? And then he gives it to me. Yeah. And then another pit stop that you'll run into is going to be the effective date, you guys. And one of the main things that we want to make sure is that the client is covered once that first payment comes out. So the sooner the better, obviously, for both you guys, but more importantly, the client, because we want them to make sure that the coverage is active. So
this is on the last page of the banking before you get the banking.
Yeah. So perfect. The way this works, Hayden, is the first payment will come out within 1 to 3 business days so that you're immediately protected and don't ever have to worry about anything. Will that $198 be in your account?
Yes.
Okay, awesome. So he said yes. In some situations, they might say no. And at that point, try to work within the next couple days if you can. I typically don't like to push stuff out more than 15 days or so. But that's the best way. Just be super assumptive. And then the next thing is just asking for banking. I mean, we've all had situations where we ask for banking and the client's like, oh, I don't feel comfortable giving that out. Or, oh my God, like I didn't know how to give that out to you today. I don't even know if I'm approved yet. Well, the way I've always gone about it is I just need to make sure that we're partnered with, this is once you get the effective date and then you go into getting their routing and account number. So Hayden, I just need to make sure that we're partnered with the bank that you bank with. Who do you bank with?
Wells Fargo.
Wells Fargo. Okay. And was that open in Texas where you live?
Yes.
Okay, awesome. So what I'll do, you guys, is I'll go onto Google and I'll put in Texas Wells Fargo routing number. And that routing number is going to pop up. So the next thing I'll say to Hayden is, okay, Hayden, I have that routing number here as the 112110022. Is that correct?
Yeah, I think that's right.
Okay, awesome. And then what is that account number?
Let me get my checkbook.
Okay, so that's just a smooth way for them to verify, like, oh yeah, that's the routing number. I've had people say, like, how do you know that? Well, routing numbers are public information. So it's just a really smooth transition into that. From there, basically, Hayden gave me his account number. He's good to go. We've done all of our signatures. The next thing I'll say is, obviously, the most important thing with any presentation that we do is we don't care what submits, we care about what stays on the books and the client being protected. So cementing is going to be the most important thing. So with completing the application, it's okay, Hayden, everything's looking great on your application. Now, before I submit this, I just want to let you know that I take my job very seriously and I am graded on what I do. My intentions today were to make sure that we found you a plan that you're able to afford and maintain that would take care of your family. So just to confirm, you do fully understand what we went over today, which is the mortgage protection coverage, the level term, $150,000 of coverage for $198 per month, correct?
Yep, correct.
Okay, so Hayden, do I have your permission to submit this?
Yes.
Awesome. If Hayden's approved, I like to tell them right there and then. I typically don't do callbacks. All right, Hayden, I have some great news for you. You've been approved. Congratulations. Now grab that pen and piece of paper so I could have you write some information down. I'll have him write down carrier name, coverage amount, monthly price, policy number, my information. And then from there, to really, really cement it down, it's now, Hayden, your policy will be mailed to you within the next 7 to 10 business days. You'll get a large envelope in the mail directly from Americo. When that policy comes in the mail, make sure that everything's correct. Go through it, make sure spelling, social, beneficiaries. If anything looks wrong, make sure you give me a call, okay?
Okay.
Lastly, Hayden, I'm your agent for life. I come along with this policy. I'm not only here when something happens to you, but also while you're living. If you need to make any changes with your policy, such as address, beneficiary, or add coverage at any point, I'll be your go-to person. I had a presentation yesterday where I went through that script with the lady yesterday, and I had already sold her a mortgage protection policy. And I told her, hey, I also do all kinds of life insurance. So if you ever need anything, feel free to reach out to me. And she goes, oh, you do final expense? I need a final expense policy. So she's getting one for $84 a month. So just an add-on, you guys, that they know that you do all types of coverage. Also, Hayden, if anyone else calls you about this, make sure you don't let them mess anything up on your policy and feel free to give them my phone number, okay?
Okay.
And do you have any questions for me before I have you off the phone?
No, simple enough.
Awesome. Well, great speaking with you. Congrats on qualifying. So that's pretty much like the entire script. It's very simple.